Let me ask you a question, and be honest. Have you ever opened your trading chart, stared at it for 5 minutes and thought, wait a minute, what on earth is this? Lines, colors, indicators blinking like a Christmas tree, you zoom in, zoom out, draw one line, then delete five, and somehow, by the end of the session, your brain feels like it ran a marathon, yet your account looks like it ran off a cliff. Yeah. Welcome to trading. See, most traders believe they're losing because they don't know enough. They think the secret is in another course, another indicator, or the latest YouTuber claiming to have cracked the code. But here's the truth. The most dangerous thing in trading isn't the market. It's your brain on overload. Let's call it what it is. The lie of complexity. It's that voice whispering, if I just add one more confirmation, one more filter, one more thing, I'll finally get it right. Spoiler alert, you won't. You'll just get more confused. And trust me, I've been there. When I started trading, my charts looked like a NASA control room. RSI, MACD, Fibonacci, Bollinger Bands, trend lines that looked like a spider web. If the market moved up, I was bullish. If it moved down, I was bearish. If it moved sideways, I opened Twitter. Yeah. But one day, I realized something powerful. Complexity isn't intelligence. Complexity is fear, dressed up as productivity. We pile on information to feel safe because the market makes us uncomfortable. But here's the paradox. The more complex your trading gets, the less control you have. Today, I want to help you break that spell, because once you see through this lie, you start trading with clarity, not clutter. You stop reacting and start responding. You stop chasing setups and start understanding structure. So sit back, grab your coffee, and let's talk about the 4 psychological laws that separate the 90% who lose from the 10% who win. And yes, we'll laugh a little along the way. And hey, before we dive deep, if you love trading psychology and these deep dive lessons, hit that like button and subscribe. It tells YouTube you want more wisdom like this. Law number 1, the control paradox. The first law is something I call the control paradox. It goes like this. The more you try to control the market, the more it controls you. Sounds poetic, doesn't it? But it's pure psychology. Every losing trader wants certainty. They want to know exactly when price will turn, how far it'll go, and what candle will do it. That's like trying to predict the mood swings of a cat. You can try, but good luck. Human brain hates uncertainty. So what does it do? It creates the illusion of control through overanalysis, through adding more tools, or through revenge trading. We don't want to feel powerless, so we do more. But here's the catch. Markets reward patience, not prediction. The pros understand that control doesn't come from knowing, it comes from managing yourself. Every time you resist clicking that extra trade button, every time you walk away when price goes sideways, you're regaining control, not over the chart, but over your mind. So next time you feel that urge to act, remind yourself, you're not supposed to control the market, you're supposed to flow with it. As Bruce Lee said, be water, my friend, not a blender. If you relate to this struggle, drop a comment below. Let's discuss how you personally deal with the urge to control your trades. I'd love to read your thoughts. Law number 2, the 90-10 emotional rule. Let's move to the second law, the 90-10 emotional rule. Here's what that means. Trading is 90% emotional, 10% technical, but most traders act like it's the other way around. We obsess over entry confirmations, but ignore our own confirmation bias. We backtest data for months, but never test our ability to sit through drawdown without panicking. Think about it. You could have the best system in the world, but if fear or greed takes the wheel, you're toast. A trader's biggest opponent isn't the algorithm, it's the amygdala. You ever notice how your strategy works perfectly in demo, but not in real trading? Yeah, that's because your demo account doesn't whisper in your ear, "Hey, buddy, that's your rent money." The emotion changes the execution. So, what's the solution? You train your emotional reflexes. You learn to feel discomfort without reacting. When price goes against you, instead of asking, "Why is this happening?" ask, "What is this teaching me about my emotions?" That's when trading becomes meditation, not madness. If this part hit you, give the video a quick thumbs up. It helps this message reach more traders who need to hear it. And tell me in the comments what emotion ruins your trades most: fear, greed, or impatience. Law number 3, the 80-20 principle of clarity. The third law is a simple one, and yet it's what separates amateurs from professionals. It's called the 80-20 principle of clarity. In trading, 80% of your profits come from 20% of your setups. But what do most traders do? They focus on everything, every move, every candle, every indicator on YouTube. Here's a little joke I like to tell my students. Most traders don't need more analysis, they need an intervention. The best traders I know are like snipers, not machine gunners. They wait, they watch, they execute one clean shot. Clarity means elimination. It means saying no to 80% of opportunities so you can master the 20% that actually matter. Look at it like dating. If you say yes to everyone, you'll end up emotionally bankrupt. Same thing with trades. Focus creates freedom. So simplify your chart, simplify your rules, simplify your routine. Because complexity doesn't make you better, it just makes you busier. And if you agree that clarity beats clutter, comment "Simplicity wins" below, so I know you're part of the 10% who truly get it. Law number 4, the compound effect of mindset. Now, everyone in trading talks about compounding money, but almost no one talks about compounding mindset. You don't become a consistent trader in one giant leap. You become one through hundreds of tiny improvements, one decision at a time. Every day you follow your plan, you compound discipline. Every day you don't chase a setup, you compound self-trust. Every day you journal honestly, you compound awareness. These small actions build invisible capital, mental capital. And in the long run, that's what turns a trader into a professional. Let me give you an example. Let's say you improve your patience by just 1% every day. By the end of the year, that's not 365% improvement, it's over 3,700% thanks to compounding. So if you ever feel like you're not progressing, remember this. The market isn't testing your strategy, it's testing your consistency. Growth is invisible before it becomes undeniable. If that inspires you, hit subscribe right now, because this channel is all about mastering trading psychology and building consistency step by step. Let us recap what we have learned so far in summary. So let's tie it all together. The lie of complexity tells you that trading success comes from knowing more, but the truth is, it comes from mastering less. When you stop trying to predict and start trying to understand, everything changes. You trade calmer, you think clearer, you start to enjoy the process. And one day, you'll look back and realize it was never about beating the market. It was about beating your own impulses. Because in the end, trading doesn't reward the smartest, it rewards the most psychologically stable. So next time you feel that urge to complicate things, Pause, breathe, and ask yourself, am I trading clarity or confusion today? And if the answer is clarity, congratulations, you've just joined the 10%. Until next time, traders, stay calm, stay focused, and remember, simplicity isn't weakness, it's power. If this episode gave you value, smash that like button, subscribe, and let's keep the discussion alive in the comments below. Tell me what part hit you the most. See you in the next one, traders. Stay sharp.